Hey everybody, Josh Sigurdson of World Alternative Media here, and we're joined by our author and economic analyst here at WAM, John Sneisen, and this man with the Bitcoin on the back of his head, of course, is the one and only Simon Dixon. And of Bank to the Future, something that has been very interesting to me for quite some time now. Simon, first, before we go into anything else, can you explain why you created Bank to the Future?
All right, okay. So I was working in investment banking. It was 2006. I decided to quit my job. And I wanted to return to some of the things that I was learning in economics about some of the assumptions of money. The way that our economy was going at the time, we were talking about systemic risk, we were talking about the problems in banking. No one cared, no one wanted to listen. It was pre-financial crisis. So we wanted to just spread the word a lot more. It was just a really boring subject at the time. No one cared about money. No one was interested in it. It was a bull market. No one would listen. But then the financial crisis happened, and then Bitcoin was created, and we went to the very first Bitcoin conference at the world. I gave a talk about the difference between Bitcoin and banking, and never looked back.
Yeah, now obviously when we go about deconstructing the banking system, replacing it is a whole other story, and you've been really good on really targeting that issue. Can you go into how do we really replace the banking system?
Okay, so the message that I was giving to people at the time, the talk I gave at the first Bitcoin conference was helping people understand three very important principles about Bitcoin and banking and the difference. So when you deposit your money with a bank, the bank becomes the legal owner of that money. That's why they can bail in. That's why they can take the Cypriot money. That's why at the ATM they can turn off the cash. That's why the governments can come along and bail out, because it's not actually your money. They just promise to give it back to you. And with Bitcoin, you own it. It's in your pocket, it's on your phone, it's on your hard drive. That comes with responsibility, but it's your money. It's like cash. Whoever steals it, whoever has it, is theirs. Okay?
Well, you went over a really important point there. When your money's in the bank, it's not yours, it's a bank's. And now with a centralized cashless society versus, the decentralized cashless system like Bitcoin and other cryptocurrencies, if your money's in the bank with a centralized cashless system, it's always theirs, it's never yours, and basically you are in servitude to the banking system. We've seen that in other countries. All the currency is going through, a digital currency at the bank. You never hold it in your hand, and that's become extremely, extremely dangerous going forward. So how important is it for people to understand, the difference between something like Bitcoin and many other cryptocurrencies, and then something that's so incredibly centralized like these central banker coins that they're trying to push forward?
So the trend is right now is central banks are jumping on the bandwagon and looking to create their own cryptocurrencies. This is actually a really important distinction for people to understand. What central banks are doing here is they're hedging their bets against the retail banks imploding. Because retail banks are actually the creators of money. They invented digital currency. They created a digital representation of the money that the government's created. The money that the government's created is in your pocket, it's coins and cash. The retail banks have a license to actually create a digital version of that money every time they issue a loan. So when they issue a loan, somebody else goes into debt and you get a new digital currency deposited in your account, but it's called the same name as the thing that the government creates, so you think it's the same thing, but it's actually not. It's a very different risk model. Your own money has a lot less risk than money at a bank, because that's the credit risk of how the bank spends it and what they do with it. So what central banks are doing right now is they recognize that there is actually a lot of systemic risk in the digital currency held at a bank that you thought was the government's, that you thought was yours. And so what they're doing is they're creating their own digital currencies. Now, these digital currencies are not created by, they're not created by banks. They're not backed by debt. They're just simply a wallet that exists on the central bank's ledger. Now, let's say that the banking system collapses. They can't bail in because there will be riots on the streets this time. The appetite to bail out, is not there. They can bail in and they can take people's, but then that takes all the trust out of the financial system, and they can use your deposit to recapitalize the bank. But what I forecast is coming next is the central banks will say, okay, we'll let that bank go bust now. They're no longer too big to fail because we've got our new tool called digital currency. Yeah. And what they'll do is they'll say, you lose your $10,000 at JP Morgan Chase, but come bring your wallet to our central bank and we'll give you the equivalent deposit because there's a ledger, and it will be our cryptocurrency. And this cryptocurrency, but this, I was always criticizing the banking system. You think the banking system's bad? Wait till you bank with the central bank. That at least the bank is one step removed from the government, and the government kind of fight regulations and implement all sorts of corruption and stuff in order to try and get their way. But when you're dealing direct with the central bank and the banks go bust, you turn up at the wrong country, you go to Acapulco, and America says that Acapulco is not the place you should be visiting, they'll switch off your wallet. They decide that you owe them $5,000 this month, and you're trying to prove to them you're not. They'll take the $5,000 and you need to prove to them to try and get your money back. That's what's going to happen when the system goes that way. So when governments do that, and when governments make cash illegal, which they're all going to do, they're all going to follow India, we need something that's going to keep them more honest. And the only thing that's going to keep them more honest is a system, an exit that people can choose that exists outside of the banking system, that exists outside. That was the role of gold. But now we got cryptocurrency. And so now you've got the gold markets, you've got the cryptocurrency markets, and you've got the traditional financial markets. And now you've got the central banks that are raging war on the retail banks. And we got the most interesting time in financial history where all of this is going to unplay over the next 10 years. And we're going to see some of the biggest shift and changes in wealth you'll ever see.
Yeah, and you mentioned bail-in regimes there for a moment there. I mean, Mario Draghi at the ECB recently said that he plans to amend legislation at the European Central Bank in order to withdraw depositors' insurance on money. So even in that kind of system, there can be a run on the bank if there's a centrally planned cashless system. But on top of that, if there is a bail-in, if they do go that route eventually, if they're in complete desperation mode, I mean, you can't even insure the money that you have in the bank. It's gone beyond anything we've seen before. They seem to be really driving this forward. And, we've looked at the Federal Reserve in recent days, trying to push up interest rates so much, just trying as hard as they can, because they know between 2008 and 2012, they had to drop interest rates out about 5.5%. So considering that, they'd have to go negative to, actually really fix, I should put that in quotations, fix the next major monetary crisis, which could inevitably happen at any time. We don't really know. But with that said, I mean, there are a lot of issues in the Bitcoin and the Bitcoin Cash community. I mean, the way I've always looked at it is very non-divisive. You can use a gun to slaughter a whole bunch of innocent people, but you could use that same gun to save all those people from being slaughtered. Same thing goes for the blockchain. You could have a centralized blockchain that could enslave humanity, and then a decentralized blockchain that can overthrow that which enslaves humanity. But of course, this is such a unifying movement, the decentralization of wealth, the decentralization of money. What do you think is happening with this whole Bitcoin Cash versus Bitcoin phenomenon that seems to be right in our faces? You mentioned you like Bitcoin more than Bitcoin Cash, and it's like confronting a pack of rabid dogs.
So, look, Bitcoin, it's important to understand, look, there's thousands of cryptocurrencies and they're all competing for different user cases, different attention and different things. But there is only one cryptocurrency that can perform the decentralized role. The reason is because Bitcoin was created at a time when nobody cared. It was created by a group of anonymous people that didn't do any marketing, and it was just a computer science experiment, social experiment. And it required about 3 to 4 years of no one giving a shit before that actually got to be the point where it is, okay? So Bitcoin, the challenge with Bitcoin is its monetary policy, and the beauty of Bitcoin is its monetary policy. They said no central planning, there's 21 million of these things, and people are going to fight to have them. Right? Every 10 minutes, new bitcoins get created, and every 4 years, the number of bitcoins that get created every 10 minutes will halve, and then eventually there'll only be 21 million. Every year since we spoke at that very first Bitcoin conference, they've got more and more useful. This year, what happened in 2017 is Bitcoin became so popular and so useful to so many people that we reached a scaling point where it started to divide the community into different schools of thoughts. Now, what happens as Bitcoin scales, the way that it's actually been designed is the more people that are using it, the more people that are transacting with it, the higher the fees come in order to pay the miners, which are the people that are verifying and kind of performing the role of bank and Visa and MasterCard, verifying every transaction. Now, for 3 years, everyone was debating and had different schools of thoughts about how to scale Bitcoin, because it is the most important thing. You know, the entire world is going to touch this technology. How are we going to cater for them all? Some people decided that actually there is unlimited demand for on-chain scaling. And because there's unlimited demand, we need to find another way of scaling. And that another way of scaling is to implement decentralized technology that allows you to do things off the main chain. Because if you do something on the chain, you know, the more transactions on chain, the higher the fees. This is kind of the crux of the debate. Now, another school of thought said, actually, you can just increase the block size and you can keep the transaction fees low and you can keep increasing and there's no consequences to that. Other people believe that that causes centralization because mining gets more expensive to do that and therefore more efficient, and it will, you know, create more centralization in the mining system. Nobody knows the answer to that. Bitcoin Cash doesn't know the answer, Bitcoin doesn't know the answer, but there's different schools of thought. So because Bitcoin truly is the only decentralized thing, you had a load of businesses all colluding together saying, we need to cater all these wallets for all these new people like Coinbase and blockchain.info, and say, you know, they said we need low transaction fees, people are complaining. And all the businesses colluded together with one venture capitalist in one conference and said, here's our plan of how we're going to scale Bitcoin. All the miners got together and said, well, here's what our self-interest is in order to scale Bitcoin. All of the developers said, here's our view of how to scale Bitcoin. And for 3 years, because no one controls Bitcoin, they just debated. And it was really frustrating, but it proved that Bitcoin is decentralized because none of them got their way. Now, what happened in 2017 is something really healthy came along. The community decided, let's just let the market decide. And they said, well, let's create a version that's got these big blocks. Let's create a version, you know, let's keep Bitcoin conservative and those transaction fees can go up, but let's work on off-chain scaling so that you can have really cheap off-chain stuff. And then people said, well, let's have the compromise, let's have both. And that debate kind of came to an end, because, you know, the Bitcoin Cash team came along and said, we believe Bitcoin should be cash, it should be cheap, and everyone should be able to transact. And the Bitcoin core, you know, the people that bind it, the core community said, we believe that Bitcoin's digital gold, you should never break it, it should be ultra conservative, and if other people want to innovate around it and innovate off chain, then they can go do that. We'll make sure that this chain never breaks. Yeah, and that was the crux of it.
And there's, like I said, it's such a unifying situation that we have with blockchain technology, something that has the power to end central banks, has the power to, with that, end potentially even war. I mean, it's an incredible thing. And with that said, you know, people will yell at someone because they dare to invest in this, or yell at someone if they dare to invest in that. Personally, I have both Bitcoin and Bitcoin Cash, but I prefer Bitcoin, and I think it's up to the market in the end to decide whatever people want. The free market's always right, and it's a beautiful thing. Unfortunately, sometimes markets aren't always smart. That's why McDonald's is the biggest burger joint in the world, but also has the worst burgers. But with that said, John, do you have a question?
Yeah, with all that said, I mean, when it comes to the risk in the financial markets, like I've done a lot of research, especially lately. We were talking about how banks barely have any capital that they have available to the depositors, and also seeing the risks. I went and looked into Canadian banking system, and I saw they had 0.39% to protect the depositor insurance. But also there is a lot of risk when it comes to the pension sector, the RSPs in Canada, the 401ks in the US. What do you think? What is your opinion? What should people do in order to, be able to mitigate the risks of these things that you guys were talking about, the bail-ins, the risks of the banks creating that centralized currency, basically forcing you to put it into their new system? What do you think is the solutions for those people, and what can we do to really change things? Because they're stuck in the current paradigm, the current system. What can they do?
Okay, at the government level, what the government should be doing is taking a portion of their country's electricity and mining Bitcoin. That, if I was a small country, if I was Acapulco, if I was, a country somewhere in, Africa or something, I would bet on Bitcoin because, just like Bulgaria, seized some bitcoins from a money launderer, and they had this hard drive with loads of bitcoins on. They came and returned to it a few years later, and the value on that hard drive was worth more than their entire national debt. That story is going to repeat itself because there's only 21 million of these things. They get more useful every year, and people are finding more and more ways to use them and do things with them. At the pension level, every single fund manager in the world, whether you believe in Bitcoin or not, you have to invest. If you are responsible, you have to invest in an uncorrelated asset because most assets are correlated. Bonds, stocks, whatever you're investing in, they're all correlated because they all depend upon, the traditional financial system working. So they can hedge with some gold, and everyone that owns gold needs to hedge with some Bitcoin. Everybody that owns, to me, gold is kind of a hedge against Bitcoin failure now in my high risk, high speculative world. But then again, I'm a young person. I'm not, about to retire. I can take higher risks with my capital. So the only responsible way I believe that people should be doing this is you can't, you could be, if you're young, and this is what the younger generation are doing, they're not going to buy stocks, they're not going to buy bonds, they're not even going to buy gold anymore. They are all in crypto. They're all in the SEC, the Senate hearing, they all met. And they were saying, my children don't want bonds, they don't want stocks, they're just investing.
Surprise.
In crypto. Yeah, and so this is the new asset class of the young. This is all they care about. It captures their imagination. These cryptocurrencies are connected with things that interest them. They are mission driven, they're purpose driven. They might be scams. There's lots of scams out there. It's buyer beware because a lot of these things. But the only reasonable thing that I could tell someone to do, and you can't take this as financial advice because
it's our opinion, yeah.
But you need to hedge your fiat money. Now, if you might need all of your money in order to pay your rent, but you got to figure out how to take at least 10% of your income, and I would suggest the best place to put that 10% of income, if you can afford to lose it, is in something as risky and speculative as Bitcoin changing the world, because I believe that might happen. But the beauty of that is even if you lose it, even if you get the timing wrong, Bitcoin's a volatile beast. It's a very volatile beast. If you get in at the wrong time, as long as you've got a long-term strategy, I believe these 21 million Bitcoins are going to be more and more in demand, and more people are going to want them. And that can only come out in the price, which is why people are using it as their savings account. And if you're just taking 10% of your income, put it in Bitcoin, which exists outside of the financial system, as long as you can afford to lose that, then what's the harm in just keeping them? Don't sell them. Jesus, don't sell them. And then once you've built wealth there, once you realize what it's like when you own a deflationary asset, that your purchasing power increases over time and you become wealthy like so many people have as a result of following that very same strategy, you can take 10% of those Bitcoins and speculate on things like Bitcoin Cash, which is more speculative. Or you might, if you owned Bitcoin, you would have got Bitcoin Cash for free. You would have got Bitcoin Gold. You would have got all these things for free. They're given to you as a reward for owning Bitcoin. You get dividends from these hard forks. You get the opportunity to take those in and out of different speculative things. Take 10% of that, and you might lose 100%, of the 10% of your Bitcoins, or you might make 100% because they're infinitely more risky. But value your wealth in Bitcoin is what I think the message should be. And all of these people, every central bank, the smaller central banks, if you want to take on the dollar, if you want to take on the renminbi, if you want to take on the rupee, if you want to take on some of these currencies, you're going to need to have a Bitcoin strategy. They all need it. And that's when Bitcoin becomes not just the world reserve cryptocurrency for cryptocurrencies, but starts to become the world reserve cryptocurrency for currencies, full stop.
Yeah, exactly. I want to get you to go into a little bit quickly about what you're doing with Bank to the Future, because I actually personally have been able to invest in it, and it's very exciting, I think, what you're doing. But I'm going to let Josh just finish off and ask you the final question.
All right.
Yeah, because this is a very interesting subject, Bank to the Future. I know it's really important to get the crowdfunding for a lot of these projects that are coming up. I know you guys have included Anthem Blanchard's Anthem Gold, which Anthem's a good friend of ours, and he's trying to innovate the market. There's a lot of market innovation, and that's one of the beautiful things about the free market, is that we all try and work as hard as we can to bring it to the next level, or else we get left behind. So can you go into how important this crowdfunding is and how important it is to support Bank to the Future and everything that you're doing?
All right. So firstly, Bank to the Future is extremely speculative, it's high risk, it's for people that have money to be able to speculate on these things. Your first step is Bitcoin. If you earn good wealth in Bitcoin, then come to us. We can help you make more speculative investments with that. I wouldn't say Bank to the Future is a responsible place for people to start. That's
good to know.
Yeah. Now we've been through a really interesting time. So, we were investors in all the equity of many of the largest companies in this industry, whether it be exchanges like Bitfinex, Kraken, Bitstamp, Bitso, the largest exchange in Mexico, BitPesa, the exchange in India, not in India, in Africa, and UnoCoin, the exchange in India. We had a forecast when I wrote the book. Myself and my wife founded banktothefuture.com, and we had a forecast that the future of finance looks very different from the past. We didn't know which companies would succeed. We wanted to diversify very widely. So anything we were investing in, we allowed our members to co-invest with us. And things like Anthem got funded. A lot of the companies that are speaking here today were some of our early investments that we made. That's Bank to the Future. Now, what happened is last year, people started to take the code behind Bitcoin and invent new things like smart contracts and tokens and Ethereum and all that stuff. And that created a wave in crowdfunding where true crowdfunding on a global scale started to happen. That started to disrupt Bank to the Future because anyone could, on a global scale, could invest in these cryptocurrencies. They didn't necessarily need to be wealthy to do that. If 2017 continued as it was about to eat up the entire financial system. People were going to do ICOs to, buy out the entire stock market. The IPOs were no longer going to do IPOs. The public companies were starting to launch their own tokens through ICOs, and that was pumping stock markets like 1,000%. Where do you see returns like that in the traditional stock market? You don't. So this was about to take on the entire financial system, and retail people were involved. And that's what this ICO thing has done. Come along. Regulators are going to stamp that down. They're going to turn them into securities. They're going to make it follow securities law, and that's exactly what's happening right now. So at Bank to the Future, because we've been involved very early and we were securing those licenses, we think we got the right mix between something that can exist in a regulated world versus understanding what it means to be a Bitcoiner and what that is all about. At the same time, we'll invest in decentralization. We'll invest in decentralized exchanges. We'll invest in decentralized things that make Bank to the Future less relevant in the future, because this is where it's going. We're going to have a two-tiered market. We're going to have people that need to operate in the fiat, KYC, ID upload, traditional financial system. They need to take their fiat, they need to convert it into crypto, and they need to go through a regulated financial institution to do that. And then you're going to have the decentralized world where you own your own hardware wallet. You can send that money to anywhere in the world, and you take care of your own personal security in order to have complete financial sovereignty and protection from the financial system, and decentralized exchanges where people trade in a peer-to-peer manner. That two-tiered market is growing. They're both booming, and it's the most exciting time to be alive in financial history.
Absolutely agreed. And finishing it off, we just heard the news a couple days ago that there is a new decentralized exchange that's being built up right now, EOS Finex, I believe it was called. Interesting idea. Worth always looking into. This market is all about innovation and transformation and competition. And I mean, in the end, you know, if there's something great and then there's something even better, let's hope that that which is better replaces it, because that's what the free market's all about. And we don't see that in the heavily manipulated markets that we have today. It's held down by banks, it's held down by regulations, taxes, government, all of that madness that we're all very used to at this point. So I really appreciate the work that you do, and I hope people check out Bank to the Future if they're not starting out, if you're ready to speculate a little. So thank you very much.
All right, thank you. Yeah, I mean, yeah, if you don't mind me ending on a final point, because I think it's important. This can be extremely overwhelming. It's a you know, finance is really jargon rich. Technology is jargon rich. Take finance and technology, you got some things that would are really, really hard to understand. But in its simplest form, Bitcoin exists without the financial system. Everybody needs to try and learn how to use Bitcoin, learn how to buy some Bitcoin on a small scale, you know, just to get started, and then you can grow it from there. And then you'll learn what it's like to earn your own money, spend your own money, and then you can get more speculative, you can learn more, you can start learning how to have hardware wallets and be more personal security. But in its simplest form, just take that first step, because you're gonna have two choices. You're either gonna do it when you don't need to, or you're gonna do it when you do need to, because when you do need to, everybody's gonna try and get hold of Bitcoin, and they're gonna be some very expensive Bitcoins.
Absolutely. That's a beautiful thing to see. And of course, everyone should do their own due diligence and don't throw money at that which they don't understand. That seems to be simple logic. But once again, thank you very much.
Thank you.
Wow.